Joining us today on Your Stocks are Parthiv Shah of Tracom Stock Brokers and Vaishali Parekh of Prabhudas Lilladher. Parthiv, Vaishali, good afternoon. Thanks a lot for joining in. I'll get to our first query for the day, and that is from Shafi. He's writing to us from Andhra Pradesh. He's holding 1,000 shares of NTPC at 171 rupees and 1,000 shares of ONGC at 152. Now, he's a short-term investor and he wants to know whether he should hold or sell these stocks. So, Vaishali, I'll start off with you. Which among the two, ONGC or NTPC, which chart appears more stable compared to the other?
Hi, good afternoon. Actually, both these stocks are very stable. So I would say continue holding with a trailing stop loss. I would say for ONGC, 270 acts as a support and 286 acts as a resistance. So once we see the stock moving about 286 to 90 levels, we would be seeing the stock going towards 310, 320. So this is how ONGC has to be played with. And NTPC also still going great. And I think continue holding with a trailing stop loss, because the way these stocks are moving, I won't be surprised if it goes towards 400 levels.
Right. Parthiv, PSUs have been the favorite of retail investors since almost the last year and a half, and ONGC and NTPC are not generally among the stocks that generally get spoken about when it comes to PSUs. We usually talk about the RECs, the PFCs, the IRFCs. Now, this gentleman is a short-term investor. He is holding both ONGC and NTPC. What is your advice to him for the short term? Which among the two do you think is likely to outperform the other?
Good afternoon to both of you. See, I think one fundamental change that both of these companies are witnessing, first I'll start with NTPC and then ONGC, is the way these companies are managed. In terms of NTPC, we know for the fact that it has one of the largest thermal power plant assets, and currently the plant load factor, plant availability factor are doing extremely well. They have their own coal mines, so very well backward integrated business model, and the realizations are extremely good. In fact, there are charters about if new capacities don't come up on time, in few years' time, there could be some power deficits. So in that case, I think it's a very good play. Moreover, I think the additional trigger for NTPC investors is about the IPO. And we are very confident that by this year, I think we'll witness the IPO of NTPC Renewables, which can unlock a lot of value. And we have seen what sort of valuation is unlocked in a lot of PSU-based renewable energy type of companies, whether it is the financiers or for the generators. So we are very upbeat on that front also. So positionally, I think NTPC is looking good. In terms of ONGC, I think we know for the fact that the fortunes of this company are dependent upon the upstream oil realization. And as of now, I think the realizations are looking pretty good despite all the geopolitical tensions. It has not like crazily spurt up. But I think a key trigger would be any sort of new production increase for ONGC in terms of the gas production and also the upstream oil production, which I think probably might not be very easy and would take more time. So it seems that ONGC, I think, could stay here, consolidate for some time. But NTPC looks very good because it has a lot of triggers in the short to medium term.
Plenty of triggers for NTPC in the short to medium term, as Parthiv was highlighting the impending IPO as well of the green energy business. But moving on then, Shirisha is now writing to us from Mangalore, and she's holding 10 shares of Page Industries at 36,000. Now, she wants to know whether to hold or to sell those shares. Now, Parthiv, Page Industries came out with numbers recently. They flattered to deceive. The stock has been a bit of an underperformer in recent times. Whether you consider the year-to-date basis, it's down almost 8%. On a one-year basis, also, it's down around 13-14%. What is your call on Page Industries, and what is your advice to this writer for who's holding these shares? Because it's not something that will give you quick or instant returns, 100-200% return. It's been on the expensive side as well.
Oh, yes, quoting at around 65 trail price to earning multiple. And at a point in time where since many quarters, it's a very surprising element, but I think despite all the consumption boom we're witnessing in India, I think some of the innerwear segment, due to competitive intensity, due to the replacement cycle, whatever we may call it, but it's not been growing with all guns blazing. And despite the fact that Page Industry holds the finest brands in ethnic wear, which is Speedo and also Page Industries and Jockey, I think what we have witnessed is the growth has been pretty moderate. And that was witnessed even in the Q3 con call of the management that, they were not very upbeat in terms of the growth prospects. They managed their cost extremely well. That's why the margins have held up pretty well. But there is no major volume growth happening. And unless and until that takes place, I think it's very difficult to see a further re-rating of the stock. Rather, one is positively surprised that, the stock has not derated and it is held up on those levels. But I think there are no major triggers in the short to near term. Even the management alluded to the fact that Q4 could also be a little tricky in terms of proper volume growth. So I think I would suggest an avoid, or maybe the investor can take an exit from this company.
The investor can take an exit from the stock. There is the advice coming in from Parthiv. But moving on then, S. Jaykumar now is writing to us from Krishnagiri, Tamil Nadu, and he's holding a 10,000 shares of NIIT, which he purchased at 102 rupees and 40 paisa a share. And he also has 1,000 shares of Igarashi Motors at 524 rupees a share. And he's a long-term investor and wants to know whether these are good stocks to hold on to. Now, Vaishali, in the short-term charts of NIIT, the stock has been a bit of an underperformer in recent times, but this gentleman has purchased shares at 102. What are the charts looking like for the long term when it comes to NIIT?
So, well, I would say that it's showing signs of bottoming out. So, I would say 95 should act as a stop loss, because even the indicators are showing that it's all likelihood it can bounce back. So, right now there is a near-term hurdle at around 113. So, keep a range of 95 to 113. If this stock moves above 113 and sustains, then I think it's ready for a long-term target of around 140 to 160 in times to come. So that is how I would look at NIIT.
Right. And what about Igarashi Motors, Parthiv? He wants to hold on to that stock as well for the long term.
See, as an auto ancillary stock, we know for the fact that it supplies permanent magnet motors to a lot of automotive majors, and they have very good collaboration with the Japanese company. But somehow, I think if you see into the numbers since last many quarters, I think it's not really held up well, whether it is related to the margins or in terms of the revenue growth. And this is despite the fact that we have witnessed a fantastic OEM automobile growth. In fact, a lot of the auto ancillaries have kind of, increased the wallet share with their customers, and not only the wallet share, but even the value share, because we are seeing a lot of, high price cars being sold. But in case of Igarashi, I think that is something as a trend we are finding the company struggling. So don't see any major triggers, and I probably believe that it's better to focus on other auto ancillary shares versus Igarashi.
All right, Parthiv, Vaishali, stay on because it's time for a short break here on Your Stocks. On the other side, we'll answer more of your queries. Stay tuned. We'll be right back. Welcome back. You're watching Your Stocks, and Parthiv and Vaishali are still with us. Our next query comes from Ram, and he's writing to us from Chennai, and he's holding 100 shares of Sun TV at 500 rupees a share, 580 rupees a share, and he's a short-term investor and wants to know whether he should hold on to the stock or he should sell them. Now, he purchased it at 580, Vaishali. He's pretty much in the money right now with Sun TV at 666. What are the charts suggesting for the short term? What should he do?
So I would say continue holding with a stop loss of 650, because if you're seeing overall the media sector has really not participated, and there is a lot of scope for this to go up. So Sun TV is one of the good weighted stocks. So I would say that continue holding. One can hold the stock with a stop loss of 650 and look for a target of 700, 720.
Interesting. By the way, numbers of Century Ply are flashing on your screen there. EBITDA is down 16% compared to last year, and margins have also seen a contraction of 400 basis points compared to the last year of 17% figure that they had reported. The stock there now 1.5% lower as we speak. And moving on, Kunal is writing to us. It's our next query. He's holding 25 shares of ABB India at around 8,200 rupees a share. Now, he wants to know whether this is a good stock to hold on to. Now, Parthiv, capital goods has been the flavor over the last month and a half. The stocks have been on a tear, whether it be ABB, Siemens, Thermax, all of them have seen very strong returns during this period. What should this gentleman do?
I think it's a fantastic company and firing on all cylinders. And every quarter we witness, I think, the commentary that the order book is going up. There's a lot of inquiries, and what we saw is like the stock getting massively re-rated. And whether you talk of in terms of electrification, in terms of motorization, process automation, robotics, we know there's a lot of private capex going on, and ABB's management is quite vocal of the fact that a lot of new products from the parents tech tie-up they're able to launch, and they have 5 manufacturing facilities which are operating at very high utilization levels. And overall, I think our sense is that still next 3 to 5 years there is fantastic visibility, and products that ABB has launched where they don't have much competition, nor I think there is any threat of any new company entering into that space. So there's a lot of productivity enhancement equipments that ABB supplies to a lot of companies in the industry. That's why we feel that despite the fact that on a trailing basis is quoted at around almost 90 times forward multiple, with the way the order book is trailing and the way the margins are also looking up with better execution, I think one would suggest a hold on ABB.
The stock has doubled in the last 12 months. What are the charts indicating, Vaishali? 8,400 right now. What are the key levels to watch here?
So I would say actually it's to run up. If you see the charts right from daily to weekly to monthly, all are pretty much in an overbought. So I would be a bit cautious. So I would definitely suggest to no harm booking partial profit. And then again, once you get some dip, good to lower your cost. So that's how I would play the stock. Partial profit booking is recommended from my side.
Partial profit booking is what Vaishali is recommending. And our next query comes from Karan, and he is writing to us from Mumbai. He is holding 150 shares of ITC at 420 rupees. Now he wants to know whether to hold or to sell. Parthiv, the numbers look decent when they came out yesterday, but there was a period when ITC just did not move from 200 rupees. Then it had this stellar run to 500. Now it is again stuck in this 400 to 500 range. What are the next triggers other than this hotel business demerger that can take ITC now to newer highs?
See, historically, if you've seen, like ITC always has this, dull movements where for a couple of years or maybe a year, the stock doesn't do anything. But I think the earnings and the free cash flow tends to catch up. And then all of a sudden we see value buying emerging. And luckily, I think for ITC, the good news was that the BAT stake selling, I think that was over, hoping for the fact that there's no further stake supply. So that is something which has helped the stock. The stock did recover after that. And I think looking into the results, I think the cigarette volumes were pretty decent. No complaints there. The margins have held up extremely well. And now most of the businesses of ITC is doing well. And as you rightly mentioned, the hotel business demerger, I think that should definitely add value. More importantly, I think there are no major triggers, but I think what we are expecting is in second half, I think post the monsoon season, I think ITC's FMCG numbers should do better than what they've already done. No doubt they've done a lot better than a lot of their peers in terms of the volume growth and how the margins have panned out. But I think the rural strategy, I think that can catch up with the rural growth. I think that will be an additional trigger for the stock. Quoting it around 26 times forward, not very expensive. I think if the rural economy picks up, I think there is a scope for re-rating further in ITC.
What about the charts, Vaishali? The stock has barely moved in the last 12 months, absolutely flat. It's stuck in that 400 to 500 rupee range. What are the levels to watch out for on ITC?
So gradually it is definitely getting into the higher top, higher bottom formation. But what we need is a clarity for this stock to move past 446, 450 levels. So that would be a confirmation for the further uptrend to continue. So till then, I would say it should be consolidating within the range of 425 to 445.
All right, Vaishali, Parthiv, we leave it at that. Thanks a lot for sparing time and answering our viewer queries on this episode of Your Stocks. Wish you a good day ahead. That was Vaishali Parekh there and Parthiv Shah answering her queries for the viewers. By the way, the market though, the Nifty is back at 23,000 at the highest point of the day now. 23,010 is where the Nifty is. What is doing well are auto stocks and metal stocks. They are the ones that are leading the gains in today's session. And if you look at the top gainers as well, L&T is the top gainer. But in terms of the point contributors, it is HDFC Bank that is leading the charge on the Nifty, and it is ensuring that the downsides are kept in check. But with that, it's a wrap on this edition of Your Stocks. We leave you with the Nifty at the highest point of the day, but don't go anywhere. Closing bell comes up next, and also write into your queries on or email us your queries and we'll address them with our experts. Back on the other side with closing bell.